This is the Texas Land Guys podcast, hosted by brothers Tim Dosch and Tom Dosch. With their partners David Marshall and Trip Rich, they have built DMRE, the leading land brokerage in Texas. With decades of experience brokering deals between landowners and real estate developers, they take you inside the deals that move the market.
Welcome to the Texas Land Guys podcast. I'm sitting here in the Dallas office with Trey. Trey, how you doing this morning?
Doing well. How are you?
I'm doing good. We're making our way through the year here. I can't believe we're already halfway through 2026.
I know. It's this year's flying by. It really is. I mean, I feel like we say that every year, but it's been, one of those years where just everything macro going on in the world feels like it's been a grind, but it also feels like it's flying by. So it's really interesting.
Yeah, there's been a lot that's been happening. We're actually sitting here Father's Day weekend, recording, and so you want to share your mug here. You got a pretty awesome.
I got my
mug.
My Dada mug that my kids made me. So excited to show that off on the podcast here.
It's pretty awesome. I was like, did you bring that from home? You had to have brought that from home, and it was a gift last night. You said.
Yep.
And I was telling you I love when my kids give me stuff like that, but then I always am so worried to use it.
For sure.
So I know you said this might be the one time you bring it out.
Yeah. Yeah.
Because you want to have that forever.
I told Madeline I was gonna take it on the podcast today. She's 3.5, so she doesn't totally know what I'm talking about, but it'll be a good memory one day.
Well, she'll love listening back to this and hearing that you said her name.
Yeah.
And gave her a shout out. That's pretty cool.
That's right.
That's good.
Do you have any big Father's Day plans?
My kids said they were going to kidnap me. And so I'm not sure. I'm not sure what that means.
Where are you going?
We'll see. I'm not sure. There might be, they may have accidentally told me that we're going to go see Toy Story 5.
Oh, nice.
So that was unintentional. One of the sons said something and then the other one was like, don't tell him anything. And I was like, okay, I think he just told me what we're doing, but
that's cool.
So that'll be fun.
I read somewhere it was a lot of people were saying it's the best Pixar movie in 20 years. So,
oh, wow. All right.
Yeah,
well,
get excited.
That'll be good. I'm sure it'll be fun.
Yeah.
I always love getting to spend time with the kids for Father's Day. It's because they always want to do something special and they're all little. So it makes it really, really fun to see what they come up with.
Yeah.
That's
cool.
But yeah, as you were talking a minute ago about just the start to the year, I was thinking even in this last week, since we are recording this in the middle of June, this last week was wild. We had the SpaceX IPO, which was the largest in history. We had the signing of the end to the war in Iran, which who knows what's going to be happening with that by the time this releases, because I saw this morning there's continued fighting between Israel and Hezbollah, but still that was a major event. And then we also had the U.S. government stepping in and having Anthropic pull down their model. So it was like the first time that you have the U.S. government stepping in from like a regulatory standpoint. And that was big. So it's a wild time right now.
And I would add to new Fed chair had his first real press conference and kind of signaled that, for homeowners and home buyers, in order to get control of inflation, there might need to be some dissatisfaction from people trying to refi their mortgages in the short term, which kind of made Wall Street and other people feel like there could be a chance of a rate hike actually coming soon, which I don't think anybody had on the radar this year.
Yeah, no, beginning of the year, there's no way we would have thought rate hike. And I did see an article after the job posting was completely different than what everybody expected, where the job numbers came in high.
Mm-hmm.
And so then they were saying, well, maybe with inflation, it's possible.
Yeah.
So, that would be a surprise. But hopefully if there is any kind of a hike, it's so minimal that we're really more in just a, plateau state. I don't know that we really can handle any kind of a serious hike. And I don't think that is likely with what's happening in the economy. But I think we all had thought we would see some cuts. Yeah. So if we don't see those cuts, I think that'll have a direct impact on some of the land that we're working on and just the way that some landowners are thinking about their sites and when they might be feasible again for development, or even developers that have been holding their sites. Because we've had a lot of developers tell us, I'm just waiting for that rate cut. And once I can get 50 basis points, 100 basis point cuts, this deal works again.
Yeah. Well, and I think that's a a good transition into, one of our talking points today is just kind of, where is the herd going? And also from a leasing standpoint, just some of the things that we're seeing here in DFW over the last couple months. One of the things we were talking about is just leasing demand, especially in the more interior submarkets of DFW, has been really strong. We're talking to a lot of multifamily developers who are talking about getting 40, 45, 50 leases a month on lease ups in places like Grand Prairie and Arlington, even, areas around North Dallas, like
Garland.
Yeah.
Concessions burning off in Louisville.
Yeah. And so I think that leads us to a place where, in a lot of ways, we feel like some of the growth submarkets like Anna, Melissa, Chisholm Trail, it really feels as though rents have hit rock bottom. I think you would say probably hit rock bottom in like January, February, March of this year, sort of coming out of the holidays. A lot of people were, obviously sharing how bad rents had gotten. And it seems like since that point, all we've heard about, especially again in the more proven submarkets, is that leasing is really trending in the right direction. And have actually heard from several developers that they're starting to tighten concessions, which is probably the first time since 2022 that we've heard of that type of direction in the leasing market. I mean, it's pretty much just been the last 3 or 4 years of increasing concessions, reducing rents, just trying to get heads on beds more than anything, and everybody just kind of fighting to the bottom. But I think that's really exciting because even though there's been challenges in the market, the starts have been lower, and if we're headed in the right direction from a leasing standpoint over the next 12 months, that's really the front end of the pipeline, because it seems like debt and interest rates are going to be relatively sticky with the general range that they're in. Construction costs have been lower, and so in order to really make deals pencil, the third leg of the stool, the rents really have to start increasing, and we're starting to see some of that.
It's interesting because we've been waiting, like you said, for so long to see this happen. If we looked back at what people expected, it's a demand and supply story. So demand has been there, but supply has been so high, it's just outpaced demand. Now you're seeing starts down to the point where we've just been waiting for this to happen. Like, when were we finally going to see the bottom in rents? When are we finally going to see some rent growth? And we haven't even really been able to think about that because all we've been hearing is 10 weeks free, rents continuing to drop, how challenging it's been. But to your point, just in the last week to 2 weeks, we've had several of our clients tell us something's just kind of switched. And I would say some of them have attributed it all the way back to the beginning of the year. And this is not everywhere because there's still some areas where there's quite a bit of supply. And so I talked to another client this week that said, their lease up's been a bloodbath because it's just, there's so many other projects in lease up. They're still at 10 weeks free. And so it's still been really difficult. But then we've also talked to so many other clients that have said, 110 leases signed in the last 90 days, 38 leases signed last month, concessions completely burned off. It's enough now to where you and I are starting to say, okay, this is a trend. Yeah. It's not like it's 1 or 2 projects. Because at first we were hearing about it in Grand Prairie and thinking, okay, this must be like a Grand Prairie thing. They're just getting a lot of leasing activity because it was like 3 or 4 projects. And what's interesting about Grand Prairie is there's a lot of new supply trying to absorb, but all these new projects are actually getting really strong leasing. But now we're seeing it, like you said, in some of these other markets. What's interesting is we're seeing it in the middle of 2026. And we're starting to feel like, okay, this is a trend. And I wonder how far we really are behind what the numbers were showing from the beginning. Because we knew we had so much supply. And you remember all those graphs we were seeing where it was like supply, drops off. and then there's like very little supply. We're finally now starting to experience that from like a macro standpoint in DFW. And then there's these micro pockets that still have quite a few projects in lease up. And so we'll kind of work through those. But that's a huge story. That's huge because a lot of the projects, the 14 multifamily land sites we closed last year, the ones that we've already closed this year, the ones we're, set to close here soon, they're all betting on exactly what we're talking about.
Right.
They can't make deals work at 10 weeks concessions and, no rent growth. And so starting to see things turn is going to be huge for the multifamily development business.
Yeah. And I mean, to that end, I was talking with a guy that we know in the construction business this week, and they're a third-party GC for multifamily and BTR developers. And, he was echoing everything that we were believing in terms of starts are really slow right now. There's not a lot of jobs getting capitalized and getting out of the ground. And so all that leads back into what we're talking about is supply is slowing down. So you're starting to have that lease tightening and the concessions, and hopefully that'll start leading to some rent growth. And then, like we said, places like Anna, Melissa, it kind of got to the point where it doesn't seem like the rents could get any worse in those locations, right? Like at a certain point, you're probably just going to let it sit 20% vacant instead of signing leases at, like $800 a month, whatever that bottom truly is. But I think feeling like some of those markets have hit rock bottom, it's probably going to take them another 12 months to kind of climb out of the supply that they have and feel like they're starting to catch some of the lease tightening. But I think all the signs there are really encouraging.
Yeah.
And then even back to what we've talked about before is like so many people chasing urban projects and wrap projects this year. It's like there's not a lot of supply there either. So I think we'll see rent growth in that pocket as well. So
before we get into just kind of like generally what we're seeing in different submarkets across DFW for different product types, I wanted to say, I think if you're a multifamily developer, it's go time. Potentially you missed your window to be early. And I know we've been talking to a lot of developers the last 6 months that were like, we want to be early. We want to be putting sites together now. You never see construction pricing come down. And we have, because it never ultimately comes down.
Yeah.
If you look at it as a graph, it's going to always be trending up over time.
Yep.
There's been this unique window where those developers that are in tune with the market have seen significant price reductions. It's funny because we'll still talk to developers. I talked to one this week that are like, no, we haven't seen any change in costs. And then you and I know that we've seen that.
The other side of that story too is like, even if it hasn't gone down a ton for some developers, it hasn't been going up.
Yeah.
Right. And, everyone's always underwriting increases in construction costs and contingency. And so the fact that it's not going up is still very beneficial.
Yeah. But the reality is the guys that are active, it's going down.
Yes.
I mean, we're hearing stories like we were talking to a builder recently, and they were saying their dirt guy came and was 40% below expected cost. And he just told him like, I need to keep my teams busy.
Yeah.
And he's like a reputable guy. This is not some guy that you're like, should we hire him? Another group, they just voluntarily came and cut their costs because they said they could, because they wanted to keep and it's like, who's doing that? Instead of guys leaving job sites, like you're saying, to go to another job site because they need more, they're actually coming and cutting their costs. So
I think the other, not to solely hone in on multifamily, but the other side of this is with industrial is just industrial leasing. It's been on fire, and a lot of it's, it's the continued distribution, but a lot of it is, as we're hearing, is relative to AI and data centers and not just, those projects by themselves, but all the pieces that go into supporting those. Like all of those companies are moving in, and there's so much leasing demand for industrial. And so we've actually seen pricing on land starting to rise for industrial and really seeing competition increase. Even though, it's been steady for the last 12 months with industrial being strong, but you're really starting to see a little bit of increase in just that overall aggression in the market from the industrial standpoint.
Mm-hmm. Yeah, it's a good point. And we'll get in here in just a second to these other use types. But one thing I was going to say that could be a little bit confusing for audience. The last time you were on, we talked about the equity freeze.
Yeah.
So it might feel like, well, what are you guys saying? You're saying that rents are coming back and you might be late to the party and construction pricing is down. So maybe just you want to just explain like how all that actually does fit. Because we still have developers calling us saying nobody can get equity.
Yeah.
And then what do we, but then we just took a site out and we had almost 40 offers in 2 weeks.
Yeah.
From quality developers. So
I personally have a little bit of a different view on that. I don't know that I would say anybody's late to the party, personally, just because of what you're talking about with the equity piece of it. I think you might be late to the party to capture developing at a really low construction cost.
Mm-hmm.
But I think and I think if you're getting into the ground right now, it's a really good time. And I think hopefully a lot of those guys that are getting into the ground right now are going to capture massive upsides on their projects in 3 years. I hope that for all of the developers, because the last couple of years have been pretty brutal.
Mm-hmm.
But I think that there's still a lot of runway, as things are continuing to be challenging from the equity side, as you're asking about. I would say that we continue to hear from a lot of veterans in the business that this is the toughest equity market that they've ever been a part of. And we're talking about guys who've been in the business since 2000, 2005, like 20 plus year, like market leaders saying, this is the hardest equity market I've ever been a part of. So what does that all mean? I think it just means that you've got to be really disciplined in what you're going after, because you have to be able to capitalize it. But right now is like, if you have a way to get a project done, you should be really bullish about it.
Mm-hmm. That's a perfect segue into the herd.
Yeah.
And what that means. And when we say the herd in our business, we mean, just like in nature, if you have a herd all running in one direction, that's what tends to happen with developers. And it's actually a function of where the equity is. It's not a function of really necessarily where the developers think is best or want to be. It can be, but a lot of times it's just where does equity want to be? And when we say equity, we're talking about institutional equity, because that's what really moves the needle. You have these huge institutions that our developers work with, Goldman, BlackRock, Prudential, AIG, the list goes on.
Yep.
Those institutions right now have been mostly on the sidelines. Mm-hmm. And so when we say there's an equity freeze and it's very difficult, those institutions are in a lot of ways on the sidelines, because you hit on this too. It's been so difficult the last several years with development. And a lot of these institutions hold assets that they thought were going to be off their books by now. They invested in them 4 or 5 years ago. They've recapped them now, but they haven't been able to sell them. And so the thought of, hey, do you want to go do another deal in Grand Prairie? Mm-hmm. And maybe they've already invested in 4 deals in Grand Prairie. Mm-hmm. They want to do another deal in Grand Prairie, but they're on the sidelines because they can't right now.
Yep.
And so that's what's been difficult. And that's where groups that have private relationships have been able to still remain pretty active or have gotten really creative. Maybe there's, incentives, PFCs, HFCs, different ways, bond deals that developers have been active. But let's talk about the herd, where the herd is going now, because there are institutional deals still getting done.
Yeah.
There's just not a lot of places they can get done for multifamily. But let's talk multifamily, let's talk industrial, and let's talk single family. Mm-hmm. And maybe we start with some of the stronger areas where when we're sitting down in meetings, these are the areas that are always coming up with these developers.
Yep. I would say right now, the top 2 areas that are continuing to come up with multifamily developers is Grand Prairie and North Dallas up into Plano. So kind of just call it the tollway stretch from 635 basically up to Legacy West. And then around 635 between the tollway and 75. And then same thing, like along the Bush corridor between the Tollway and 75, just kind of that northern Dallas sort of ring. That I would say is consistently in every developer meeting we have, that is consistently the two pockets of town in 2026 that has come up.
Well, and so maybe some specifics on Grand Prairie. I think it's interesting, just recent closings we've had, and developers listening will realize how big of it, how rare this is. We closed an industrial last year in Grand Prairie that they funded before it was technically zoned, and closed one day after zoning.
Yeah,
that never happens.
No.
I mean, that never happens, but that tells you how strong that market is, because they had to do that to get the deal.
Yeah. Well, and the incredible part too is like that was an institutional level industrial developer.
I didn't know that was possible.
That's not
I've never seen that before. Yeah.
That's not a private capital group. Like that was very much like as outside the box as it gets.
And then so multi has been tough, but you closed a deal in Grand Prairie last year in December, and that whole deal came together in a very short amount of time. And it was at a big number too.
Not trying to be boastful, but we actually closed 2 in Grand Prairie on the same day.
Well, true. That's a good point. That's a good point. And those are both impressive for different reasons.
Yeah.
But the one I was thinking of was impressive just because, again, big number, big project, really good location. So it's not like they overpaid, but they were aggressive because there was competition. There were several offers, but how fast did they close that?
That was like a 100-day transaction.
Yeah, I mean, which is so unheard of.
Yeah,
in multifamily.
Yeah, I mean, but that just goes back to like private developer having the vision to say, hey, we're recognizing all the things that you're talking about is low construction costs, leasing is starting to head in the right direction. Like if you're going to make a bet, now's a good time to do it. And so you've definitely seen people be aggressive on that front. And then also, we're continuing to hear big numbers in Grand Prairie. Like, it's interesting because you would think they're starting to get to a place, and we've heard developers mention like, it feels like Grand Prairie is going to finally hit a supply wall, and it just hasn't.
Yeah.
Every project that opens, every developer that we've talked to that's opened a project in Grand Prairie is like, we cannot believe the leasing velocity.
I've been thinking it's hitting a supply wall for 5 years.
Yeah.
And it hasn't. And there's been deliveries every year.
Yeah. And I think that just ties into why DFW is so awesome from a land and development standpoint, is just because you look at Grand Prairie and it's got jobs. It has access to jobs. If you're not working in Grand Prairie, like we're working on a lot of industrial deals in Arlington and Grand Prairie. There's just access to jobs and reasonably affordable places to live.
Which is a perfect segue into single family and why it's also strong in Grand Prairie, because you have the jobs, you have more jobs coming with all the industrial, commercial development. You have a very robust and strong multifamily market in Grand Prairie. So if you can find land for single family, because I would say probably single family has some of the highest barriers to entry in Grand Prairie, just because there's not a lot of land left and it's not priced at a point where it's going to be very achievable to build single family. Sure. But if you can, there's a ton of demand to be a single family developer builder in Grand Prairie. Yeah.
And there's been, not necessarily in Grand Prairie specifically, but in the surrounding submarkets, Arlington, Euless, Bedford, those type of places, kind of all of the mid cities, there's been finished lot opportunities that have popped up in those submarkets that have been incredibly aggressive from a finished lot price. And a lot of them are, I don't want to say mom and pop, but you're more like local developer who, went and bought 5 to 10 acres that was kind of looked over and said, hey, I'm going to do some finished lots here and do it myself. And because those lots are so scarce and in such high demand, the builders are just paying them crazy prices. So these mom and pop guys are like, well, I was going to do it myself, but if I can make a couple $1 million and just exit right now, like that feels pretty good. So it's really been interesting. Just the mid cities in general, it has been regardless of product type, just a place where you should be able to get deals done if you can find the right site.
Yeah. Yeah. And to your point, Euless, Bedford, Arlington, a lot of these other cities, I think there's just less opportunity there. The barriers to entry are a little bit higher there than in a place like Grand Prairie. Grand Prairie has been very open for business. They've rezoned a lot of tracts for industrial. They've rezoned several tracts for multifamily.
Mm-hmm.
They've allowed big mixed use developments. And so all of that has resulted in the type of activity we're talking about.
Yep. And I think continuing on the where's the herd going mindset, I think there's a couple thoughts here. One of which is where are developers at today, right? Which we've talked about mid cities. We've talked about North Dallas into Plano. Plano being a SB 840 friendly market, has seen a lot of activity.
Let's hit that a little bit deeper before we go.
Yeah.
We go beyond, like just Plano in general. There's so much that's been announced there in the last few weeks, like job wise.
Yes.
I mean, that's becoming like a backbone of DFW.
Yeah. I was thinking that'd be really good to hit on because in like a 48-hour time span, it was like the Mavs left downtown Dallas for North Dallas. The Stars announced they're moving to Willow Bend in Plano, which is super exciting because that's up towards where we live, and I'll be excited to go to more Stars games. But they had that announcement. AT&T announced, they're moving out of downtown Dallas up into Plano, like 9,000 to 10,000 employees. Then, like a day or two after the Stars announcement, Samsung announced, hey, we're moving our corporate headquarters for the U.S. from New Jersey down to Plano. And it just seems like really the last couple of years, and part of it's just been zoning. You couldn't get anything done there, but like outside of Legacy West, Plano's been a little bit of a sleepy place. It seems like almost a sleeping giant, if you will. Yeah. But now between SB 840 and the ability to now actually get multifamily done in Plano again, coupled with how much job demand and job growth is coming to Plano, it's, we've been talking about for years that the Dallas side of the Metroplex is really pushing north. And I think when you have those type of moves, it just really like captures all of that. And so I think it's pretty incredible to think about what the next 5 to 10 years is going to look like for the northern suburbs. It's really interesting to think about what's going to happen to downtown Dallas long term. Like, I'm sure at some point it's going to get so bad that they figure it out and something starts to swing back the other direction. But for right now, it just seems like the trajectory is go north.
Yeah. Yeah. It's incredible. And I think right now, Plano specifically is probably, that's kind of like the golden stock right now. I mean, that if you're a developer and you're looking for a place to go build a project and you can do something in Plano, it's incredible right now. So we did have that property we listed recently, and we had more activity than we've ever had on a property. It was in Plano, and we had close to 40 offers in just under 2 weeks. And it was, I think what I commented to you that was so incredible was it wasn't a bunch of offers from groups you'd never heard of. It was like, well, and first of all, we only actually went out to about 60 groups. So we got, almost 2/3 of groups offered, but it was like name after name after name of developers that, develop all across the country, big names, and almost all the offers stacked up as good offers. Yeah. There weren't a bunch of, we see a lot of like bottom feeding offers on just random listings. We didn't see that on this.
Yeah. And I think that was what was really made everything very difficult about it, is like we had so many offers, and usually it's when you get 30 offers on a deal, it's pretty easy to look at half of them and be like, man, I'm not sure today if that group can get this done, or looking at it a different way is like, I'm very confident that this 15 groups could get this deal done. On that one, it was like probably 80-90% of them. You're like, hey, if under the right conditions, if you gave this group time and worked with them to the finish line, like they can get this deal done, which is really incredible.
Yeah. But I think it just speaks to what you're talking about. And I think the center of Dallas has just moved north.
Yeah.
The center of activity, the center of jobs, the future.
Yeah.
You just the scale of the city is now, and I think that's why it's so smart the Mavericks went north. I think where they are is great, especially in light of Fort Worth.
Yeah.
And just connecting over to Fort Worth. I think that's significant. But yeah, just Plano's really been in the news a lot.
I saw someone joking on LinkedIn that it's not DFW anymore, it's PFW, just with how much Plano's exploding. I don't know about that yet, but
Plano might take that one and run with it a little bit.
Yeah, no doubt. Might see a couple of banners or something.
That's good.
But yeah, I think all that makes a ton of sense. And so I think back to where we're headed is like, there's the places that developers are really focused on right now, but we're thinking as we're talking about the herd, where are we really looking to the next 12 months? And even if you're an investor and you're looking at the next 3 to 5 years, like where do you really want to be? And so some of the submarkets on that front, like I would say right now, it's been very difficult to get anything done in Celina. Also, McKinney has been a market that has seen a ton of industrial demand. It's got a lot of, I don't want to say a lot, but it has considerable amount of multifamily supply right now that's making some lease ups a little challenging. And single family, it's picky on school districts when you get into McKinney and how far north you go. But I think the point I would make is McKinney's been a little bit softer from a demand standpoint the last couple months, but from my standpoint, like that's a market that I'm really long on. I think that if you have the opportunity to get in McKinney and you have a 3 to 5 year vision, like it's, to me, it's going to remain one of the top 5 submarkets in DFW, just because you have the mixed use developments, you have jobs, you have really good school scores, low taxes, the right balance of affordability and incomes. It has the recipe to be a really strong submarket long term. And then from that standpoint, Celina took back fastest growing city in America in 2025. And right now it's really tough to get anything done in Celina. Single families oversupplied, multifamilies oversupplied, industrial's a little bit timid about going out there yet. And to me, I think there's such great opportunity because there's a lot of people that over leveraged or bought in Celina at maybe too high of a price. And obviously some of those people are just going to hold. But if you can get into Celina and even, to that end, like Prosper, Celina, kind of the tollway corridor up there, even moving east into North McKinney, I'm a huge believer in that because I think if you, again, have a 3 to 5 year mindset, that whole corridor is going to be amazing long term. Everything that's being built up there is so nice. I just really believe in that submarket long term. But right now, there's just so much supply for all product types in Celina that it's really hard to capitalize anything.
Yeah, those are great points. When you were talking about McKinney, I was like, okay, I want to go buy land in McKinney right now. I mean, it's incredible. And I have our map up right now. So I was looking at that as you were talking and just thinking about land. Single family has been so hot in McKinney too.
Sure.
I mean, we've sold some sites there that set records for lot pricing. That's been incredible. We've sold sites this year for industrial there that set pricing records. I mean, we sold a site over 60 acres, no utilities.
Yeah.
Not in the city.
To a publicly traded
company.
company.
They just closed it.
Yeah.
And I think it's going to be a great buy for them.
Yeah.
I mean, it's incredible. So there's so much growth in McKinney and it's so well-rounded. I think it still just has a stigma against it from a lot of developers. Sure. Obviously there's been a lot of development. So I'm not saying that developers haven't gone up there, but There's recently been a lot of industrial development. Most of it's been in the last 12 months. There were developers there prior to that, big developers. There's been a lot of multifamily development, but we still talk to developers now that are like, McKinney, I haven't gotten out there in a long time, or it seems like it's so far outside the city.
Yeah.
Like I'm just not, and I'll even have developers that are more bullish on Denton than McKinney, which maybe I just don't understand that, because I know Denton has had a lot of growth. There's a lot of great things about Denton, but McKinney feeds off of 75. It's right next to Frisco. It's right next to Plano. And now NVIDIA just broke ground on their big plant north up in Sherman. You already had the TI plant up in Sherman. McKinney's in between some of the fastest growing and surrounded by some of the fastest growing cities in the country.
Yep.
And so I just think if you're a landowner, if you're an investor, if you're a developer, if you can go get into a site in McKinney, I heard a stat that there's 5,000 jobs coming within like a small radius of the 121-75 corridor.
Yeah.
I mean, McKinney's going to continue to just be a great market. But we have heard that concern with oversupply. There's a big site that went out to market recently, technically not in McKinney, it was in Allen, but on that 121 corridor, marketed by a group, and they couldn't sell it. It was like, it was fully zoned for multifamily, multiple phases.
Yeah.
They got offers, but the offers came in so far below ask price that they're just having to hold it.
Yep.
So you're kind of in this place right now where it's a tough market from a pricing standpoint. I think it's a great buy opportunity right now. And then I think you're right about, Celina too, same points.
And I think that we have a single family deal right now in McKinney that's Prosper Schools. And historically we had chased the site for multifamily, and single family is so bullish on the area that we've got a single family developer on the site, and the price discount relative to multifamily is only like 5% based off of where we had it under contract for multifamily in the last couple of years, which is like pretty crazy to think about when you're talking about single family getting to the point of going head to head with multifamily on pricing.
Yeah, that's incredible. Well, as we wrap up, why don't we go into a really quick lightning round?
Sure.
I'm going to put you on the spot. Give me, and you don't have to give a ton of context to this, just give me top 3 areas today, agnostic to product type, just that you'd be like, I would go, boom, develop there.
We touched on Grand Prairie and the mid cities. I would probably go there without thinking about it. As long as, the micro location was, had a good story to it. I'm still, like I said, I'm still bullish on North Dallas up to, even just a little bit north of 380, like Plano, McKinney. Like I don't think you can miss going to develop there, especially when we're talking about if we were in a vacuum and breaking ground right now. I just think it's going to be really good timing. The other place I would say that we haven't really talked too much about today is North Fort Worth. Really and when I'm talking about North Fort Worth, I'm really talking about the Speedway, North 35W, like North Fort Worth, Argyle, that whole pocket where Hillwood's doing their several master plans. Everything up there is so nice. There's a lot of opportunity. Industrial really likes that pocket. You can do great single family deals. Multifamily is pretty scarce, but I think that's a pocket that is going to quickly fill in over the next 5 to 10 years. So I'm pretty excited about that area too.
Those are great. I don't think this is too different, but I was going to say the 75 corridor between really McKinney up to just under Melissa, kind of getting a little bit north of Allen and just that stretch there. If you can find land there for any product type, just close to that 75 corridor. Same thing with the tollway. I think the tollway between really probably our office here, close to Addison, all the way up to Prosper. I think that area for any product type, I think is incredible. And then the last one, I was going to agree with you on the Speedway. I think Alliance up to probably not quite all the way up to Denton, up 35W, but I think just because the schools are so good and because the industrial demand is so high, you're going to hit residential and industrial demand.
Yep.
Any areas that you would say, at least right now, avoid if you're trying to raise capital?
Yeah. Chisholm Trail, I think it's not going to happen. I would say Anna and Melissa, you're not going to raise capital. You could probably raise capital for industrial in Melissa. And then, Denton. Denton's been challenging for both industrial and multifamily on the equity side. I think you could probably get the right industrial deal done for sure. And we've seen some groups go out there, but those three kind of growth corridors, I think remain to be really tough. Mm-hmm. There's supply, there's rent challenges. It's just kind of upside down. And, I think those are three markets that, unless I had we're talking about a 3 to 5 year mindset, I think I'd be avoiding those.
Yeah, I think you nailed it. I don't think there's really anything I can add there. I mean, I think that was a good delineation that Melissa, you could get industrial done, mm-hmm. But I agree. The good thing to your point about DFW, the good thing about a lot of these other markets is there's not really other areas where I'm like, you couldn't get an industrial and a multi-deal done. There's definitely areas where it's going to be harder to get one or the other done.
Mm-hmm.
I think what's also always interesting about a big market like this is, could you go get institutional capital in Celina today? Not a chance. Are we closing a deal in Celina within the next 30 days?
Yep.
We are, but it's private capital. And those are the opportunities. If you can go raise capital in those markets, that's a big opportunity.
Yeah. And to that end, it's a group that historically they've kind of had that more 5-year mindset of they want to be a half a submarket early and sort of beat everybody to the punch. So it makes a lot of sense.
Well, Trey, thanks for joining this morning. This was fun. I know this was very DFW focused and centric. So hopefully our audience enjoyed learning a little bit more, getting in the weeds a little bit more on DFW submarkets and getting to hear more of the behind the scenes on the types of conversations we're having with clients and what we're hearing, where the herd's going, where we think the opportunity is. Reach out to Trey or I. We'd love to hear from you. Any land needs you have, whether you're a landowner in the DFW area or you're a developer interested in developing, finding an opportunity, reach out to Trey or I and follow us on LinkedIn. Thanks, Trey.
Thank you for listening to our podcast today. If you have questions about land you own in Texas, send us an email at texaslandguys@dmre.com and follow us on LinkedIn to stay updated.